Well, good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. We are joined today with Jeff Zananeri. Jeff, welcome to the Midweek Roundtable. And how are you doing today?
Excellent. Great to be with you as always, Roger.
Pleasure is all mine. So, as you could see, I got, as you called it, the Tron look in here.
I like it. It's high tech.
Got to do stuff to spruce things up a bit, you know?
It matches your futuristic mind.
There you go. So I know that there was a topic. We were actually just having a call, a group call, which we have every morning at WealthPress. And somebody there mentioned NFTs, and they were asking me about it. And I was embarrassed to say that I'm not an expert on NFTs. But I know that you and Adam Sarhan and James West, you had a discussion about it a few weeks ago. Can you maybe clue us all in, since it's the future?
Yeah, I mean, I'm no expert. I just discovered it because I like to know what the kids are doing, and if it can make money on it, I'm pretty interested. So anyways, NFT stands for non-fungible token. So what companies are doing is, rather than having an outside crypto be what's used, they're creating their own token. So you go on a website, for instance, the number one non-fungible token in the world right now is the NBA, the National Basketball Association has it. And on their websites, the big thing they have is they have these video trading cards. This is the big rage with all the kids. Video trading cards where you can buy with these NFTs, with the token, the right to that clip. So you, Roger, would be the owner of LeBron James doing an amazing dunk or something. And they're priced based on how cool and how popular, market dynamics, how much demand there is for it. But because of the blockchain, and this is something you've been talking about forever, just because, we've been through so many cycles of technology and different cycles of, emerging industries, that we don't know yet what the full use of blockchain is. And there's going to be so many cool green shoots that come out of it. And this is kind of one of them. So all these companies are trying to create these NFTs now, non-fungible tokens, which you basically exchange for money. So the clips, so just so I blow your mind a little bit.
Yeah.
You can buy a video. The video can appreciate in value, as can the token. So you can get this double whammy of making money or losing money. But the token, as the website becomes more popular, appreciates, and the clip that you own also appreciates within that realm, within that universe.
Interesting.
So it's wild. It's wild. And I think that's kind of like, I've been watching this GameStop thing, and I'm not a GameStop trader, and I'm not really a crypto trader. I own a little bit of Bitcoin and Ethereum just to watch it, very small amount. But I don't trade it regularly because I'm a stock trader, and that's what I know. That's my core discipline. That's what I'm dancing with the one that brung me. But I'm interested in the future use of these things. And I've been watching GameStop, and GameStop has been a crazy stock. Obviously, we talked about that. But I'm realizing it's moving almost exactly like a cryptocurrency right now. It is what people are anticipating to become this giant digital company that perhaps NFTs are used on, could be the central location for gamers, could be the central location for all sorts of things. So while I think the stock price is totally unjustified and insane, and don't try this at home, I'm beginning to wonder what the future of this company looks like if it is part of that NFT movement.
It very may well be. It very well may be. I actually never thought about it. Obviously, I'm kind of just, it's interesting. We're talking about this. You're going to find this interesting. And yeah, this is exactly what I meant when I'm talking about how this whole crypto thing, it's super cool. It's going to make its way into prime time over the next, God only knows how many years, but we're just not, we're trying to kind of take something square and make it round and kind of make it into, kind of adopt it to our art society now.
Yeah.
But our world, when we look back, when you and I are old and gray 2 years from now,
already there, pal.
When you and I are old and gray, I've given up on all that. But when you and I are older, we'll look back and we'll be like, yeah, now that makes perfect sense. It's kind of like we like it now. We're trying to like make heads or tails out of it. And
can I say something? Can I interject?
Yeah, of course.
We're obviously both a little bit gray in the beard, so to speak. We've been around the block. But one thing I really want our viewers that are watching this to take away today, and this is a very crucial aspect of being an investor or being a trader, is having an open mind. Having an open mind. And especially as you get older, as to what's new and what's happening and how people are making money and how the world is changing. Because I see it a lot with guys my age, with guys a little older, with guys from, from the old school, like where we were trained in the markets, where they just get locked into this one thought process and this one way of making money. And they view it almost as like a threat. Like you said you sparked my mind when you said it, like a threat to our way, our world, rather than thinking, well, maybe it could be cool and good and better in a way if I just give it a chance. And I have to consciously fight against my old man instincts to have that mentality, mainly to just stay with the times and stay fresh making money.
Well,
it's like the core of my discipline.
What you're talking about right now is kind of what flashed in my mind when we first started talking about these NFTs, and you said I have to. You said something about you made a reference to kids, like I have to know what the cool kids are doing. That's actually what I was thinking of. Like
my son taught me about it. My 11-year-old son loves the NBA. He's a big basketball fan.
But you were open to it. Oh, so I see what happened. He told you about it from a basketball perspective.
He was watching these videos. I was like, what is that? And he's like, oh, you buy them with these tokens. And then I heard somebody talking about tokens. And I was like, is that the same thing? And then I did a little research and it was the #1 NFT. And I was like, oh, that could be a massive business. Like if people are really all into it like that. So,
no, this is great. And just to give you some perspective, when you were talking about it for the last few minutes, I'm watching this show, this show, and you're like, what the hell does this show have to do with this? But everything. I'm watching this show that just came out on Netflix about Mormons.
Nice.
It's all over the place. Well, I just started watching it, but it's basically about some dude who's like really deep in the Mormon thing, who starts coming out with all these collectibles. And I have this feeling that a lot of this has to do with forgery and things like that. So I was just thinking, as you were talking about these NFTs, how in the future, when somebody comes up with something like that, they'll be able to kind of stamp it and it'll be used as a security, as a objective. In other words, they'll be like a database. And you'll be like, well, this is real. Well, how do I know it's real? Well,
basically, what's awesome about it. And you've been talking about, I got to give you full props about it. You've been the one that's been like separating the blockchain from cryptos in general and saying the blockchain I love. And I started thinking about that too. Like the blockchain I love in theory and in principle, that you can have an encrypted transaction that's unique and that puts you in a place at a time with your money, with your identity, and gives you ownership that's indisputable. You don't have to go to court. You don't have to say this. It doesn't have to be cleared. It's not messy. It's clean. It's there. It's recorded. And so what we're seeing with these NFTs is that not only are you getting like a financial transaction, but you're getting like ownership, like a patent. Like you're getting a patent on products too. So what I think is really interesting and cool is like the whole world, Roger, is opening up to being like a giant stock market in real time, which is, I love that because I'm a trader. I love the possibility of that. So for me, I'm open-minded about it.
And that actually makes the world a very different place when you can have a different trading current. It just, all it does is make the world closer and the world becomes more integrated and more based on financial.
Like we should have token videos for our videos for what we say.
Hey, you know what? If there's, but
I'm not kidding though. I'm kidding.
No,
but I'm not kidding.
I know what you're saying. And no, it's a whole different, it's a digital way to not just patent and protect something, but also create an instant market value for things that might not have been.
Well, that's what's interesting. So the videos, these video cards, kind of like baseball cards. If you think of them as baseball cards that like rare ones have a good value, these video cards, they also fluctuate with market prices. But independently, the NFT, the token that you buy and sell them with, also has its own value. So you can make money on both the token and your video.
Yeah.
So hypothetically speaking, we could have a video. This video that we're talking about right now could be like the most valuable video on WealthPress. You could have a WealthPress token plus our video both appreciating. I'm just going to leave it at that.
Yeah, that's very cool. And I'll bet you when there's a transaction that goes through, it's automatically tracked in a virtual world to kind of avoid. Yeah, see, that's very, very, very cool. You could do that with pedigrees. You could do that with any kind of personal property. It opens up a lot of things. Just thinking about it, Jeff, just blows my mind away. There's something here. There's definitely something here. And this is exactly what I'm talking about. With cryptos. There's a whole world out there that we're just opening up. This is great. All right, let's shift somewhere. We got a lot of the markets are going nuts. We had the CPI come out about 45 minutes ago. I still don't know what the number is. I'm going to quickly check, but I wanted to get your perspective on, and look, the $1,000 question or the $1 million question right now. And CPI came out as expected, consensus half.
Yeah,
0.4.
I'm seeing that.
So nothing.
Right in line.
Yeah, right in line. So we're not really seeing crazy inflation or anything like that. What do you make? This is going to be a multifaceted question. Large cap tech, interest rates, dead cat bounce, or more downside. Let's focus on the NASDAQ 100, and then we'll kind of go from there.
NASDAQ, you know what? We were on Monday, we were on James West, and I got a little bit like, let's talk about Apple, because Apple could be, Apple's up like 10% since that conversation.
It's a huge part of the NASDAQ 100.
Right, yeah. So I think there's a lot of bottom line is this. This is so weird. I'm going to blow your mind right now in a way.
Okay.
Value investors are looking at big cap tech now that are growth stories. So fundamentally, some of these stocks are still the best growth stories in the world, but they're trading relatively at a relative value to themselves. You can't compare them to other you can't compare a software company's PE historically to a bank, to a brick and mortar bank's PE. You can only compare it to itself. So people get in the mistake of saying, I have to buy Apple when it gets to be a 12 PE, right? That's not true. You buy Apple based on its PE relative to itself and so there are people that are digging in these stocks because of value, which is ironic because they still have some of the best growth stories in the world.
Right.
Conversely, you're seeing stocks like Viacom that have ripped and are trading at like 50 multiples that used to be value stocks that are not necessarily per se growth. They've entered the growth realm by having streaming services, et cetera, et cetera. Right. But as we sit and as we stand right now, the world is topsy-turvy. It's upside down. So I would say that if we expect the market to remain bullish, I think the next leg that we're going to see over the next couple of months is going to be led back by some of the traditional names, personally.
Well, we're kind of there. I mean, look, I do my relative strength scans. Top 3 stocks are now energy stocks: MRO, Devon Energy, Trip, Marriott. Let's see, Trip, Marriott, Ulta Beauty, Rick. I mean, people. The markets are speaking and they're being very clear. I mean, I was just doing an expose on normality stocks the other day. Disney, SeaWorld, Six Flags, Live Nation. They're all making new highs. I mean, come on, the markets is definitely telling us something,
For sure.
Yeah. So do you believe, I mean, look, here's my perspective. There's no question that the large cap techs have gone on for quite some time. This rally has been quite some time, and they have been heating up. But I agree with you there, and I agree with you. But here's some. Not only are they're looking at them differently based on value, but what I think is a lot of these investors are looking at it based on they're thinking like it's a bargain mentality. We can get them on a bargain right now.
Yeah, that's where I'm at.
Do you believe? Okay, but so do you believe? Do you believe we're going to see more of a washout effect on the weaker ones, and the stronger ones are going to come back, or do you think we're going to be kind of over the next few weeks or a month, kind of in this twilight zone between the 200 and the 50-day, kind of just shrugging along?
I think we're going to be in a seriously choppy market until interest rates make a new move. Like, this is the thing. when we took a perspective on the 10-year bond and we said, okay, we went from 1 to 1.5, and that was a lot really fast. But if you look at 1.5 historically, it's not totally insane. You could have tech stocks triple at a 1.5% 10-year bond. Like Definitely. It's not going to stifle growth to have interest rates at that level, right?
No.
So we've already started to become kind of numb to the interest rates at these levels. That's why you saw that market move yesterday. You had like a 3 basis point move in the 10-year bond. It wasn't a big move down in the rates yesterday, but it wasn't another ripper 20 basis points to 175. So that's the caveat. That's the $10 trillion question. If we get another leg in the 10-year bond where rates go from 1.5 to 1.75, I think you get another sharp sell-off. That's another sell-off to buy. So maybe you don't buy them all. I'm still bullish, broadly speaking, because of all this this stimulus is crazy. But I think we're going to have rotating bull, bear, bust type of weeks and moves. That's why you have to be us. You have to know how to trade like us. You have to know how to position yourself for a few days, for a few weeks, for a month. I think you're gonna get really frustrated coming out when the sun's out and saying, "Oh, everybody on CNBC said now I should buy a mall stock." Well, guess what, buddy? That move's over. You know, that stock just tripled. You're buying that stock now. You're buying Best Buy now at this multiple now. I don't know. I mean, you could, but I mean, know what you're doing.
So my perspective is this: there's obviously a big red flag on large cap techs. I mean, specifically on large cap techs right now, and I think that pressure is going to remain. What's bothering me is, as you know, I've been talking about this for quite some time, is the number of stocks trading above the 200-day moving average has to cool off. The momentum levels need to soothe. That rubber band is still at 70 something percentile, and
I think large cap tech gives you a future sneak peek of what's going to happen to pretty much every other sector in the stock market as they get overstretched. Yes. I think the concept that you have somewhere to hide in a brick and mortar store that is trading at a historically high multiple with no value, because they've become momentum plays.
They have.
And so this is what happens when momentum fails in a way to these stocks. Now, what will trigger that? I'm not sure. It kind of feeds on itself, like Tesla, right? So Tesla started getting whacked, and then it got more whacked, and then it got more whacked, and people realized, wow, this thing went from 100 to 900. Maybe, a pullback to 500, basically, the 50% retracement line isn't totally insane, right? And then it bounced back to 700. But that's what I'm talking about. Is you have to have perspective on what's happened in the name. From an asset price standpoint already.
And I think what we're going to see in the large cap tech, I think we're going to see another couple of washouts, which kind of goes in line with what you're saying, a lot of volatility. I don't think we're going to enter a bear market, because that has to happen as a full spectrum stock market, not a tech. You're not going to see a large cap tech bear market. That's foolish.
You're not going to see all of a sudden, and I could be totally wrong about this. You're not going to see oil, traditional oil drillers with oil staying, around $60 a barrel. You're not going to see drillers trading at a 50 multiple in the United States.
No,
I don't think.
But I do believe we're going to see. I do believe we're going to see some more volatility in the large caps, and I think some, not all, but the strong hands like the like Now and like what's that company? The Salesforce. Companies like that, Adobe, they're going to spring Amazon. They're going to start
AMD, PayPal.
AMD, right. They're going to
start companies. These companies are growing their businesses at 30-40% a year.
Right.
So that's still going to be happening.
Yeah. But some companies like Peloton, Zoom,
I think those are trading at thousands multiples. That's crazy.
Right. So I think what we're going to see is, I think what we're seeing right now is kind of like a natural shakeout with the large caps and we'll see a bottoming near the 200-day. We'll see a lot of the weaker hands fall off. A lot of investors put a lot of money in them, and then they'll be waiting 10 years to get back to that market capitalization like they did in the early 2000s, as you and I know.
I got news for you guys, though. I mean, not you, but like people out there. If you get a real tech massacre, you think Goldman Sachs is going to be trading at all-time highs? I mean, what do you think happened? What do you think happened in the year 2000 when the tech blew up? Financials got decimated. They got destroyed. I was working at those places. Right. I had stock in those. I know what happened. It's not pretty for Wall Street if the market like totally blows up. And we haven't had the market totally blow up. So that's good. We've had necessary corrections and a lot of things that were running super hot. But I'm seeing because this is all a liquidity thing. So it's like a game of like, 3-card Monte. The card's moving around and the money's still flowing at all times into somewhere. But then one place will get cool off and then another place will get hot and then another place will cool off. I think we're going to see cycles of that throughout the year, generally speaking, if I had to describe it.
What do you see as the next few cycles like that? I'm right now, for example, I'm seeing transports. I'm seeing a lot of transport stocks, a lot of industrial stocks doing that. What are you seeing in the next couple of months between now and summer? I see the same.
I see oil stocks cooling off. I see whatchamacallit, banks cooling off. Banks trading at all-time highs. Some of them should, some of them shouldn't. Rates are not at 2.5%, like you said. They're anticipating 2.5%, but they're not there yet. And so we're pricing that in already. And so I see those sectors cooling off. I see people coming back into semiconductors. Semiconductors have had a supply disruption. I'm still bullish. I'm still bullish on real economy commodities. I think those things still go. I'm still bullish on housing. I don't think people are going to stop buying houses because the 30-year mortgage went from 2.8% to 3%.
No.
I don't know.
So basically you're going to look at the real economy. You're not going to trust the cyclical plays based on overvalue. You're going to look at each individual company on its own merit.
I think when you start seeing people on TV telling you that this is what you should be doing, the trade's already kind of happened. And so like everyone I'm seeing on CNBC, like in the mainstream financial media, is like, you need to diversify your portfolio into this. And then I'm looking at what like it's, growth has underperformed value by double digits. And if you look back historically, it happens, but we're kind of getting to like the max point of how much it can underperform. So I think invariably growth, if you want a bull market and you believe in liquidity, growth's going to come back and outperform again.
What do you think about health and biotech over the next 6 months?
That's an interesting question.
That's why I'm asking you this question.
That's a tough one, Roger. That's the toughest one. That's the least clear cut to me, because on the one hand, we've been like in this pandemic and we're coming out of it with, a full concentration of people. Like everyone's an expert now on mRNA. And, I don't know if anyone really knows what that means, but I've been having, the postman explain to me the difference between one vaccine and the next one. So I think that the technology breakthroughs on that are tremendous and the upside is tremendous, but I can't wrap my mind around if that's fully priced in or not. But again, people love speculating in biotech because biotech, like all good Ponzi sectors, offers that ticket to unlimited potential. Curing cancer is an amazing type of feat.
Well,
right?
and to just further your thought, it's also a big question mark with interest rates fluctuating. There's a different perspective of how they pile into them and pile out of them with interest rates.
I think we're going to get another shock move in interest rates, and then I think you're going to see if I have to gun to my head and we have the hard conversation, I think interest rates start calm down, and then they rip. We'll get some inflation numbers or something, and you're going to see like 170, 175. Yeah. And then you're going to see the Fed pivot, and they're going to say, we came up with this new thing where every morning we're going to open our treasury, we're going to open our bank account. We've got a big line, and we're going to buy $3 billion a day of 3-month, 6-month, and 9-month paper. And we're going to sell 30-year, 50-year bonds, whatever. And we're going to control the curve, and interest rates are going to stay nice and low for the foreseeable future. And then you're going to get a collapse in rates again for, some period of time. And the stock market is just going to go exponential when they do that. But I think you're going to have violence before that.
Yeah, definitely. I think, and I'm looking for the second shoe to drop from the large cap techs. I don't think we're there.
Yeah, you're right.
I think we need a shakeout, a good, healthy shakeout where a lot of these investors are like, okay, I'm done with this. They're still holding on to hope. The retail investor. And I think we need to see that shakeout before we go higher.
I think the problem with the retail investors, when they start to panic in one thing, they start to panic in everything.
Yeah. That's very true. And so far, very, 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 very true. They don't separate the market via sector or no, that's a very good point. That is a very good point. And so far, VIX levels have been reasonable. They didn't really react.
I read something interesting today. Jeffrey Gunlack, the bond guy. he's always on CNBC, et cetera. He's a big bond investor. And he was saying he thinks that we're going to see, he's bearish, he's perma bear, but he said something interesting. He said, if we get rates above 2% in the next 6 months, you could see VIX at 100. To put that in perspective, we had VIX at 80.
80.
COVID shut down the entire planet. So VIX at 100 would be like terrifying.
That would be, well, VIX went to 100. That means the stock market would be just like,
that would be a 5 standard deviation event.
Yeah, that would be bad. That would be very, 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 very bad. I don't want to say, I've seen it all. You've seen it all, but that's pretty extreme.
I mean, that's got to be less than 5% possibility.
I was going to say something.
Yeah, but you have to think about, it's our job to think about possibilities and probabilities and put them in perspective. So
there's no question of a doubt, there's a heightened emotional fear between interest rates and stock compared to normality right now, because we're kind of we're in that level. We're in that turning point.
Everybody's on the same side. That's what bothers me. That's what scares me. I'm a little bit of a contrarian. That's the trader in me, is when everybody's doing something, I'm always like, oh man, like the house, everything.
You have to be. You have to be. Otherwise, you don't gain. Otherwise, you're going to be just like a sheep. You're going to be going along with everybody else. You gotta stand back and look at. That's what separates you and I. Usually, we get a perspective.
Yeah. You have to.
Before I let you go, I got a fun question for you. What do you think about Dave Portnoy's new Buzz ETF? I did a little thing on it last week.
Dave Portnoy's Buzz ETF. I don't know about. I'd have to educate me. I watch his pizza reviews, but
there's a couple of things. 75. This is his advertising. 75 large cap stocks. Do you know what the market cap of the stocks is?
No.
5 billion and over. Does that sound like a large cap stock to you? Okay. So right away, and trust me, if I start listing these stocks, you'll be like, these are not. So there's a lot of large cap stocks, but there's just as many Russell stocks as there are large cap stocks, which completely distorts the return and the volatility of the fund.
He's calling it a large cap and they're all small cap.
He says 75 large caps on the first page of his website, 75 large cap stocks that have a market cap of 5 billion. I'm thinking 5 billion. To get into Russell, you got to be 2 billion. What is he talking about? So anyway, so that was number one. Number two, he's made 75% return over the last year, but I want to see what the volatility is. I want to see what the risk adjusted return.
It's going to be a nightmare. It's going to be a nightmare. Well, I think it's something that we can game, and I'm going to try to figure out how he rebalances it, et cetera, so I can fade his stuff.
It's based on AI and based on social media, how often they talk about stocks. What I did like about it was he didn't seem like he was focused in one specific area. He seemed like it was very broad. In other words, you couldn't look at the index, you couldn't look at the constituents and say it's a tech, or it's got a really healthy mix of stocks.
Nice.
But what threw me off was when he said 75 large cap stocks, and I looked through the constituents and I'm saying, well, there's definitely some large caps, but there's just as many small caps as there are large caps, which kind of gave me a bad taste in my mouth right off the bat.
Everybody's in the stock game these days, Roger. My son, we were watching TV, the same guy that was talking to me. Happy birthday to him too. His name's Jude. Happy birthday, Jude. My son, we were watching a commercial The Rock did, and The Rock was pitching a trading software app. And my son was like, Dad, The Rock is getting into your game. And I'm like, everybody's in my game, kid. It's the hot game now. So yeah, The Rock is going to have an ETF. Everybody has a SPAC, Listen, invariably, these guys are not fund managers. They're not, they're not us. They don't know about the stock market. They know what they know, and they're great at what they do, but they don't know how to manage money.
No, and
so invariably it's going to be a disaster.
Yeah, I think it's going to be a disaster. I think it's the hot thing. But again, I wanted to get your perspective. But you got a guy who has no idea about the stock market creating an ETF.
The first thing I honestly think about is how can I make money off this guy's moves, like going against what he's doing? Is the first thing I think about when I hear about this sort of stuff.
It started trading officially last Thursday, and ticker symbol is BUZZ.
We have to dig in and got to knock on some doors with some of the Wall Street contacts to see if they know how they rebalance it and when that stuff happens. So
Well, maybe that's something we could save for next week's session. That would be really a fun session. If you hear anything, please keep me posted on that. Okay.
For sure.
And I
For sure.
appreciate the discussion and the education on the NFTs. That's very, very interesting. And again, it furthers exactly what you and I have been talking about, how eventually cryptos will be used.
It's so different. You know, I never know what we're going to talk about, but it's usually fun and it's usually relevant, I feel. I hope, you know, those of you guys out there that are watching.
It's pretty relevant. We're talking about what's happening right now in the markets. Jeff, thank you very much. It was a great, great session. Folks, if you want to reach out to Jeff, please feel free. It's jeff@joyofthetrade.com. It's jeff@joyofthetrade.com. And anything you want to say, good, bad, ugly, Jeff's got a thick skin. If you want to reach out to me, only nice letters. No, just kidding. The good, the bad, ugly, I'll take whatever you guys got. It's support@marketgeeks.com. It's an email I use just for this kind of stuff here. It'll get to me fast. Jeff, thank you once again, and I will see you next week. And I hope you have a wonderful week and stay out of trouble with the market.
Oh, yeah. The market's got a lot of opportunities for us.
Take care.
Thanks,
Bye.
Roger. Bye-bye. Bye.